It's Dr. Ashanti Odom-Pitts. I hope y'all are excited. It is the Kingdom Credit Coach. We got a lot of stuff to go over. We got a lot of stuff to learn. But I promise you this, in 2022, not only will you begin to buy the block, own the block, and take over, it is time to get possession of everything that you're supposed to have. So look, hopefully you got something to take notes with, because we got a lot of ground to cover. There is strategies that are in this credit game, in these credit streets, and a lot of people not going to tell you, but that's what I'm here for, right? So let's talk about the 5 elements of credit. That's very important. When you look at your credit score, FICO score, it is actually broken down by 5 different elements. And it's important that you understand these, because they did not teach us this in school. Okay. So don't feel bad if your credit score is not excellent, because financial literacy was not something that was a priority in school, right? They taught us about everything else, but credit was not one of those things. So I'm going to help you. I'm going to help you navigate through these credit streets, so that way you can get approved for anything that you've ever wanted to get approved for. Okay. So the first thing we want to talk about is payment history. Now, payment history is 35% of your score. Why is that important? Here's the reason why that's so important. Most people will miss paying a car note or their mortgage or a credit card bill, thinking that, well, it's just one missed payment. But in actuality, 35% of your credit score is 155 points. So that means if you miss one payment, your score could drop up to 100 points. Listen, if you are in a place where you are trying to get approved for something, I'm telling you now that this is not the time and this is not the season for you to put yourself in a position to where you lose 100 points, especially not if you want to enter the 700, 800 club, okay, in 2022. So payment history, that means that anything that is reporting to your actual credit bureaus, Experian, Equifax, and TransUnion. And so because your score ranges between 300 to 850, a lot of people don't realize that something as simple as making payments on time can actually put your credit score to where it needs to be. Now, here's the thing. Let's say you've made some late payments in the past. I'm going to give you a credit hack that is going to help your life, okay? I'm talking about bless your life in 2022. What you can do is you can call the bureau, call the company. Let's say it was an American Express or your car note. You're going to call them and just say, hey, look, times were hard, or my employer was affected by COVID. Would you please go ahead and reverse this late payment? Let me tell you something. Just because the first person tells you no does not mean that you do not call back, because it's ultimately up to that person, right? So that means if the first person tells you no, just hang up the phone and call back. Again, this is a credit hack that most people are not going to give you. But as soon as they reverse that late payment, the very next month, your score is going to go up about 100 points. Now, let's talk about the next element of your credit. The next one is utilization, the amount of debt that you owe. That's 30%, okay? That's about 120 points of your credit. So you might be saying, I pay all of my bills on time. I'm never late. I've got a good case mix of credit of installment and revolving, but your utilization is extremely high. What does that mean? Let's say you have a credit card and the limit on that credit card is $1,000, but you max it out every month and you don't pay it off. You're going to drop your score 30%, okay? 30%. You cannot afford that. Not in this season. We're not doing it, okay? So here's what you need to do. A lot of times, it's a good idea, especially if you're in a lot of debt, just apply the snowball method. That means that you start paying on the one that has the largest balance first. And once you get it down to 0 to 11%, the very next month on the reporting date, it is actually going to report your new increased scores, okay? So again, utilization is 30%, payment history is 35%. What happens if you make one late payment and you max out the card? You just dropped your score 65%. Can I say that slow for you? You just dropped your score 65%. I want you to think about that. 65% is a lot of points, okay? It's like 200 and something points. So make sure that you're making your payments on time and you keep your utilization low. And you might be saying, Ashanti, I don't even know how to calculate utilization. It's okay. Okay, I got you. So if your limit is 1,000, 30% would be $300. You need to be around 0 to 11%. So you're going to take $1,000 times 11% to let you know exactly where you need to be or whatever your limit is. All right. The next one is length of history. Your length of history is 15%. That's about 55 points. Now, here's the thing with length of history. I hope you're paying attention. Anytime you close an account, your score is going to drop. If you pay your car off, your score is going to drop because it is actually helping your score to have open accounts or a trade line or account that is being reported every single month. So it doesn't mean that you shouldn't pay stuff off. I'm not telling you that, but you know, the scoring system has a weird way of rewarding people and punishing people at the same time. So you kind of just have to pick your battle. So it's okay to pay it off, but add another new trade line or a new line of credit to put you exactly where you need to be, okay? Next one is credit mix, 10%. So with the credit mix, it's installment versus revolving, right? So the difference is that when you have an installment versus a revolving line of credit, one is fixed and one depends on how much you borrow. So that means if you have a credit card and you borrow $500 this month, then your payment be $100 for that month, or it could be $50, right? Because it's going to vary. Now, let's say that you have a car note and it is $435 and it is due every single month. Then we know that that's a fixed amount. Okay, so that's very important, right? So length of history. Next one is credit, new credit. So when you think about new credit, anytime allowing someone to run your credit, every single time you're allowing somebody to run your credit, that is impacting your score, okay? Every inquiry. And so like, let's say if your credit score is not where it needs to be and you go to the car dealership because Credit Karma lied and told you you were at a 650 when reality you were like at a 520. And so when you got to the car dealership, you were greeted by an enthusiastic car salesman. And he's like, you know, you want this Bugatti? I got you. Y'all go test drive it. You're out all day. You're there for 9 hours. The sun has went down. And then all of a sudden, he comes back from the finance manager's office and he says, the lawnmower in lot B is what you qualified for. And your payments are going to be about $600 a month at a 23% interest rate. Not what you wanted, right? But what happened was because your score was not where it needed to be, you're going to end up with like 80 inquiries. Okay. So it's not worth it. So make sure that you know what their credit score approval is before you walk into that car dealership. Okay. So that's 10% is new credit in its inquiries. Okay. Another thing about having a lot of inquiries that I want you guys to understand is that as a lender, underwriter, when they see so many inquiries that are on your credit, it sends a story to them. And that story says that you're desperate for credit. Okay. And so when you look desperate for credit, they're less likely to approve you for what you want. Now, why is it important for you to have excellent credit? Now, I bet you didn't know this. Anytime you have a good credit score, you get lower insurance premiums. So instead of you paying $200 a month for car insurance, you could be paying $50 a month, okay? It could save you thousands of dollars a month in insurance premium, interest rates, down payments. Your credit score will also impact where you work. So I've worked with vice presidents of banks, financial institutions, life insurance agents, police officers. All of these individuals have to have good credit because HR determines their integrity by their credit. And I know it sucks, but it's just something else that you need to know. Like if you apply for a job and they don't hire you, credit is definitely a factor. So let's keep talking about what you can do to put your credit where it needs to be. I want you today to make sure that you check your credit score and verify the information that is being posted is actually yours. They did a study, and about 80% of the information that is being reported on the credit bureaus, 80% of that information is inaccurate, right? I'm going to give you a hack in between our conversation of how you can do different things that'll boost your score. And so right now, here's a credit hack for you. If you would call the bureaus and have your actual credit report in front of you, or if you're logged into like Identity IQ or Experian or one of those credit monitoring sites, and you actually have the addresses in front of you, and I know everybody does not live at the same place for the last 2,000 years, right? You move around. And so what happens when you move around, the individual or the resident that moves into that address, let's say they left owing a Comcast or AT&T bill, a lot of times that information will tri-merge with yours. So you'll be looking at your credit report saying, I never applied for this. I never got approved for this. Where did this come from? And so that's why it's important. So anytime you remove addresses, okay, that are no longer connected to you, you're going to boost your score an additional 30 to 60 points. That's free credit game, okay? 30 to 60 points is what you're going to do to boost it. All right, let's keep going. Let's keep going. I want you to remember payment history was huge. I want you to definitely go ahead and set up the payment reminders for your card. And don't forget that when you're looking for loans or approvals for mortgage companies and stuff like that, it's a good idea to go ahead and get those inquiries removed. So that way they don't know that you've been out here shopping for payday loans and credit cards and stuff like that, right? And so here's another way that you can actually build your credit score for free 99, okay? Free 99. Anything that's being reported to the bureaus, let's say it's your card note, let's say it's a credit card, whether it's a secured or unsecured credit card. Whatever that payment is, I want you to break it in half, okay? So if you're paying $400 a month for your car note, you're going to pay $200 at the beginning of the month and the other $200 when it's due. What is that going to do for you, right? It's going to trick the FICO scoring system into thinking that you made two payments when you did not, okay? You only paid one payment towards that principal and balance, but you split it in two. And so your score is going to go up an additional 30 to 80 points. I hope y'all appreciating this credit game, okay? Because everybody is not going to give this to you, okay? So then the other thing is that you want to look for secured lines of credit as well as unsecured lines of credit to begin to add to your credit profile. What this is going to do is going to add an additional 40 to 80 points. Now, is credit repair something that is effective? Absolutely. Anytime we're removing history of negatives, whether it's bankruptcy, child support, student loan debt, medical bills, increase, payday loans, evictions, anytime we're removing that, we are creating a new picture, right? That everything that you have is paid on time and your score is going to skyrocket. But that's only one part of the process to having excellent credit. The formula is to remove everything that's negative and then also add the stuff that is positive, okay? So the way that you're going to do that, especially if your credit score is not in a place where you can get approved, you're going to need to get secured lines of credit. I'm going to give you some information on what you need to do later, okay? Because I know you're probably like, I've applied for secured cards and I've gotten denied. It's true. All secured cards are not created equal, okay? So I'm going to give you that information. Another thing, when it comes to your credit, right, you want to make sure that after you've removed all of the addresses, after you've removed the inquiries, after you have removed everything that's negative, after you have now started to add those positive things, once your score gets in that 700-800, now it's time for you to go ahead and start putting yourself in a position where you're leveraging your credit to create wealth, okay? I'm speaking to somebody right now, because what I'm telling you is that dream or that vision of owning an income producing property, whether it's a duplex, an apartment complex, or a portfolio in real estate, now is the time for you to now use your credit to create wealth. And the way that you have to do that is you have to leverage it. All of that information, I'm okay with helping you get there and getting there. But look, before I go, I want you to visit me at queensofcredit.com, queensofcredit.com, or You can call me directly, 832-319-4743 on all social media. It's Ashanti Odom. I want you to reach out because I really want to help you. I don't believe that God does not want you to achieve everything that you've ever dreamed of. Deuteronomy 8:18 says he's giving you the power to create wealth. Cash is king, but credit is power. God bless you guys, Dr.